I'm Kim Parley, and welcome to our special coverage of Budget 2018. Let's go to Ottawa, where we have DePratto standing by. He is senior economist with TD Economics. And Brian, you've been poring over this budget all day in lockup, and I thought your report that you came out with was pretty interesting. The title of it was "The Boat Remains Unrocked." Why are you saying that?
Really because there's just not a whole lot new and not a whole lot different here. The government had a little bit more room to work with. They chose to spend it. So if you look at this budget and you look back in the fall, the numbers are basically the same. So not a whole lot of a story there.
I want to get into some of the details because there was a shift in some of where money is being spent, although you point out not as much is being spent as that first budget. But can we just run through some of the numbers in terms of what the markets or investors or even the fixed income markets might be taking a look at?
Oh, for sure. So we're basically looking at budget deficits, of less than $20 billion in the near term, shrinking over time. In terms of the debt issuance side of things, people are sure to be looking for. Not a whole lot happening there. Very similar plan for bond issuance relative to past budgets. Again, there's a little bit more spending in there relative to what they could have done. They did have a little more room to work with. But on a net basis, again, just not a whole lot different relative to what we saw in the fall and even what we saw last budget.
I think the one thing that I think maybe this is just people hoping for this versus actually, something actually could happening, but some move on taxes, corporate taxes, personal taxes, something to even the playing field given the big tax cuts in the States, and we didn't see that. That's
right. In some ways, it's interesting to talk about what's missing from the budget, and for me, that's one of the big areas here. Even if the government wasn't interested in a big spending program, say full expensing or a tax change, even something like a tax reform commission, looking at the design of the system, something that hasn't been done in more than 50 years here in Canada. Even that didn't show up today, so a little bit disappointing from that perspective.
Let's shift gears in terms of what wasn't in it, but I think that is what I think primarily people are looking at, to more what is in it. I have heard this budget called, a placeholder budget as people get ready for perhaps another budget coming before the election, which you'll often see a little more spending, a little more probably precise policy coming out. But there was some in this that people were expecting. So first, the small business tax changes, they're finished in terms of we actually know what the changes are now.
That's right. So I'm sure the government's happy to draw a line under this one. The last piece of the puzzle was the passive income for private corporations. They've simplified that, broadly speaking, relative to some of the proposals. According to their figures, 97% of small business private corporations will not be affected by this, really going after those people that really have a whole lot of money in there. So that's sort of done. The other thing we've seen in terms of some spending, the basic research, that's science, that's grants for universities, things like that. This is an area where the government had recommendations, the so-called Naylor report, where we have a clear role for government as well, where this basic research really benefits everyone. And so I think it's encouraging to see the government, putting a little more funding into that area.
Absolutely. So small business tax changes, more science and business innovation funding you talked about. One that I know is going to get a lot of headlines is the changes we're seeing on parental leave and EI benefits. How material is that?
It's pretty material. There's a lot of little stars around that, if I can put it that way. So what's being brought in is essentially use it or lose it type leave. So that's parental leave for the other parent. 5 weeks sort of bonus if the parents decide to split the leave. If it's just one parent, you don't get the 5 weeks. There's still some issues around that in terms of the replacement rate. The system they're mimicking, Quebec, they do have a higher income replacement rate, which really does incentivize that use. But nonetheless, that's an encouraging development. On that same front, in terms of the social or the spending policy there, we also saw the working income tax benefit. This has been changed now to the Canada Workers Benefit. But really, it's the same thing. It's providing, income support to low-income Canadians, but still including incentives for employment there. And what they've done is they basically moved out the income threshold at which you start seeing a shrinkage in terms of that support, and when it finishes as well. And again, just sort of reflecting the reality of the cost of living. So that's encouraging there as well.
A couple other big buckets of that money that is spent. We're seeing increased spending for health and safety for Indigenous peoples, being, I think, tagged about $4.8 billion. And also environment protection at $2.7 billion. How big a change is that from what was already in place?
It's not nothing. This isn't a giant sea change, certainly in any of these files. These are issues the government has focused on in the past and sort of continuing that agenda. Again, this isn't a giant change. It's sort of the theme of the budget, really. But it is nice, particularly if you're in one of the affected groups, to see that additional funding, that additional support coming through.
Brian, last question for you. I mean, when you take a look at this budget, you take a look at the spending again, which is lower than what the previous budget was. Do you think this leaves the government room for a lot of uncertainty that's out there right now? Again, we've got NAFTA, we've got, again, the competitiveness issue with the U.S. I mean, how does this position, do you think, the Canadian economy for what's coming?
There's certainly room left. The debt to GDP figure, we're talking a hair over 30% here, very low by any international or historic standard. Shrinking gradually through time if the government's projections hold. Those projections do look fairly reasonable as it stands. So in that sense, there is some powder dry. Would it have been nice to have seen some of that, the additional money freed up in this budget sort of held back for that? Perhaps, but with the budget, ultimately, no one's ever really happy, and I think the government's struck a decent balance between the two sides of the coin.
Brian, always a pleasure. Thanks so much.